Hi, welcome to my channel. Please like, comment, and subscribe. Navigating auto insurance for delivery drivers. Many businesses like restaurants and grocery stores rely on delivery drivers who use their personal cars. Before the pandemic, Americans had already been enjoying the convenience of having both essential and non-essential items delivered to their doorsteps. In 2019, Americans spent approximately $11 billion on pizza delivery alone, according to Statista, a market and consumer data provider. The coverage gap between personal and employer auto insurance depending on your car insurance company and your employer's insurance. There may be a gap between both insurance policies. For example, you might have coverage through your employer while driving a takeout order to a customer, but not while driving to the restaurant to pick up the order. If you're in a car accident during a gap in coverage, your personal car insurance company could deny coverage, meaning you could be stuck with property damage and medical bills. The best strategy: call your car insurance company before using your car for work. If you don't have the right car insurance for your delivery work, you could get stuck paying big auto accident bills yourself. Do you need a commercial auto insurance policy to deliver food? You may need a commercial auto insurance policy if you're a delivery driver. That's because for delivery is business use of the vehicle, not personal use. Car insurance companies see business use as a higher risk than personal use and charge higher rates accordingly. Delivery drivers are more likely to get into accidents and file car insurance claim. Commercial auto insurance policy aren't only for food delivery, but also any type of work could fall under business use like delivering packages and driving customers. If you start driving as a job, whether full-time or a side hustle, and don't tell your auto insurance company, you could face a claim denial in the future if you cause an accident. Examples of employers and insurance for delivery drivers. Depending on who you're driving for, your employer might provide auto insurance. If your driver, make sure you understand where the employer coverage ends and begins and whether there's coverage gap between the employer policy and your personal auto insurance policy. Here's a look at some employers' car insurance policies. Amazon Flex provides drivers with an Amazon commercial auto insurance policy in all states except New York. To drive for Amazon Flex, you will need to maintain your own car insurance policy. Amazon's policy includes liability car insurance, uninsured or uninsured motorist coverage, and collision and comprehensive coverage. Counting upon you having collision and comprehensive coverage on your own car insurance policy. Amazon coverage only applies when you're driving during a delivery block and does not cover any passengers. New York drivers may need to buy commercial auto insurance. Domino's Pizza stores are often locally owned franchises, and owners can purchase commercial car insurance coverage types such as non-owner car liability insurance that can cover drivers' cars during work times. However, the franchise owner's coverage may not be sufficient and your personal auto insurance may not cover your 4-car accident while you're working. DoorDash has a commercial auto insurance policy that covers drivers for up to $1 million in bodily injury and property damage if you cause an accident while on active delivery. This means you need to be in possession of the takeout order. But here's the catch: DoorDash coverage is an excess policy, which means if you causes an accident while on the delivery, DoorDash insurance only kicks in after your personal auto insurance coverage is exhausted. If you don't have your own car insurance, DoorDash won't cover you. Grubhub requires you to have car insurance and does not provide its drivers with any commercial auto insurance. Instacart independent contractor agreement states that you are responsible for getting your own car insurance coverage in amounts consistent with legal requirements, including any required no-fault automobile liability or commercial liability insurance. Postmates offers an excess auto insurance policy of up to $1 million in liability coverage per accident for property damages and injury you cause to others. You are required to carry your own car insurance. Postmates coverage only kicks in after your own policy limits are exhausted. Uber Eats offers a commercial auto insurance policy for all drivers except in New York. Uber's coverage has up to $1 million in liability coverage from the moment you accept a delivery assignment until you complete the delivery. Uber also has collision and comprehensive coverage contingent upon you having the coverage types of your own policy to cover car repairs if your car is damaged while on a delivery assignment. Through you have a $1,000 deductible. Uber's coverage can also cover your between deliveries if your own insurance doesn't. This is for the time period when you are available and waiting your next assignment. If your auto insurance policy doesn't cover you during this time, Uber's commercial policy has up to $50,000 for bodily injury for one person per accident. $100,000 for bodily injury to multiple people in one accident and $25,000 for property damage in one accident. What if I own a small business and I rely on delivery drivers? If you own a small business like a restaurant or store and you rely on employees to deliver goods in their personal vehicles, but you and your employers may need certain types of commercial insurance. For starters, your drivers generally need a commercial auto insurance policy if they are using personal vehicles to deliver goods or services. As a business owner, you could be held liable if one of your drivers causes an accident and doesn't have the right type of insurance. Speak with your business insurance agent about a business owner policy or BOP and what types of coverage to add. One commercial coverage type you can add as a business owner is non-owner car insurance. This would cover injuries and property damage if an employee causes an accident while driving their personal vehicle on behalf of your business. But non-owner car insurance is for drivers who occasionally use their personal cars for work. If your drivers are using their own car for delivery on a regular basis, they likely wouldn't cover under non-owner car insurance. They should look into commercial auto policy. What is non-owner car insurance and who need it? Non-owner car insurance is a liability policy for folks who don't own a car but who need car insurance, such as someone who frequently rents cars or someone who is required to show proof of car insurance, such as an SR22 liability car insurance coverage pays for damage and injuries to others if you cause an auto accident. For example, if you cause an accident in a car you don't own and someone else is hurt, non-owner car insurance could pay for their medical expenses. A non-owner car insurance policy may also contain other state-required coverages, such as uninsured motorist or medical payment coverage, but the primary focus of the policy is liability insurance. Non-owner car insurance is a named insurance policy, meaning only the person listed on the policy is covered. A few car insurance companies will apply the coverage to a spouse while many will not. If both you and your spouse need non-owner auto insurance, make sure the policy you're buying gives coverage to both of you. When to consider non-owner car insurance, there are a few reasons why it can be worth getting non-owner car insurance. You rent car often. If you rent car on a frequent basis, you make one non-owner car insurance so you don't have to buy liability insurance from a rental car agency. You use a car sharing service often. If you rely on a car sharing service like Zipcar or Getaround, non-owner car insurance can provide more coverage than the company provides. For example, Zipcar provides only the minimum liability car insurance requirements. You don't want a coverage gap in your car insurance. Not having car insurance creates a coverage gap, which car insurance companies sees as a high risk and usually translate into higher car insurance premiums. And then the next time you buy car insurance. Non-owner car insurance is a good way to avoid a coverage gap if you're in between vehicles. State law requires you to file an SR22 or FR44 form. Your state might require you to show proof of car insurance if you've had problems like DUI conviction, like license suspension or vacation, you were caught driving without insurance or other types of problems. Non-owner SR22 insurance is a way to get auto insurance without owning car. Reason you don't need non-owner car insurance. Here are some reasons you wouldn't need non-owner auto insurance. You own a car. If you already own a car, you'll need a regular car insurance policy. You drive a car owned by someone in your household. If someone in your household has a car, like your spouse or parent, You should be listed on their car insurance policy. You occasionally borrow a friend's car. If you get into an accident while driving a friend's car, their car insurance policy would pay. However, if you cause an accident and their liability insurance is insufficient, you could be responsible for any damages, like medical bills or property damage, not covered by your car friend's insurance. If you borrow cars often, it might be worth considering non-owner car insurance. Rarely drive. If you rarely get behind the wheel or not at all, you most likely don't need non-owner car insurance. For example, if you live in a city and only rent a car for vacation, you don't need to buy a non-owner policy. Thanks for watching. Don't forget to like, comment, and subscribe.